Good morning everyone and welcome to Morning Markets from True Potential. Just looking at how asset markets performed yesterday, we continue to see a little bit of upward movement in equity markets in the UK and in Europe predominantly. Europe's an interesting case in point at the moment. Clearly, we've continued to see economic data that improves. If we look this morning, we've seen German factory orders that have come out better than expected, increasing 4% month on month in June. Against expectations really for just 2%, and that really bodes well for ongoing economic momentum within Germany, one of the largest contributors to European growth. So that's certainly a positive there. I think the other thing that's important and has been aiding the ongoing improvement in European equity markets, but also economic activity, has been the rate of vaccinations. And you can see now just in this chart on the screen the real catch-up that Europe has played with the likes of the UK and the US, and a combination of vaccination rates improving, ongoing reopening of their economies is certainly supporting a more robust economic activity, and that's something that we can probably expect to see continuing over the coming months, supporting the European landscape. Looking at then into the US yesterday, really we saw more focus coming into speeches from a number of Fed governors, and it really just highlights the divergence in view there in the Fed at this point in time. One, they're focusing on when will we reduce the QE program, and secondly, when do they think the interest rates will increase. Very divergent views yesterday, some thinking it could be as early as 2022, some thinking it should be a bit later than that. Really, we'll have to wait until the end of this month when we hear from Jerome Powell, the Fed chair, when he speaks at the Jackson Hole Economic Symposium, and we'll maybe get a clearer picture then. Certainly that's what the market's hoping. Time will tell whether that's what Powell delivers. The other area in the US to focus on from yesterday is the employment report. So the ADP report came out yesterday. Historically, it's been a good indicator of what we might see in the labour report, which will come out tomorrow from the Bureau of Labour, and that will be an important indicator for the market because we've consistently seen this ongoing improvement in the employment trends. What we saw in the ADP report yesterday was quite a change in tact. Market was looking for around 700,000 jobs to be added. Actually, it was around 330,000. So that gives an indication of what we might be expecting from the report that will come tomorrow. But again, over the past number of months, and indeed post-pandemic, we've seen a real divergence in these two reports. So time will tell what will come tomorrow. It also really highlights that challenge of forecasting at this point in time. Are we really capturing the dynamics of what's happening in economies, both from an employment perspective, but also from a business creation perspective? The other thing I just wanted to touch on, we've all experienced it, the price of petrol increasing at the pump over the past number of months as that oil price has really moved up over to the Brent level, to peaking around $75, $76. Over the course of the month to date, very few days, but we've seen the oil price come off 8%. A combination of two things there: rising inventory levels in a number of countries, be that in the US and China, but also just that ongoing concern about where economic activity is going. Are we at peak economic growth? Are we going to see some headwinds come through from COVID-19 variants, etc.? And that seems to have impacted the oil market yesterday. Looking to the day ahead, very much about lunchtime, thinking what we're going to hear from the Bank of England. No change to interest rates expected, staying at that ultra low level of 0.1%. What will be more of the focus is what they say around the quantitative easing programme, whether they will step back from the bond purchase programme at this point in time or flag to the market how they're thinking about reducing bond purchases. We'll come on and discuss that tomorrow. Many thanks for joining us.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.